Good afternoon. Welcome to Options Center. It is Wednesday. Happy Thanksgiving, everybody. Um, Please spend some time with your family. Have a wonderful holiday. I wanted to give you an update while I had some time here, and I I had stopped doing pre-market videos for some time, and that actually got me away from one of the um, setups on Thinkorswim that I had been using in the past with the McClellan Summation Oscillator, things like that. So I brought it back, and it's a very clarifying point of view. But right now, first of all, if you're new here, go down to that bottom right hand corner, hit that Options Tender logo, and subscribe so you can get plenty more of these videos. And then don't forget to hit that notification button. Now, we've been saying over and over again that we're in a bear market and that it's not over yet. But, you know, if you've been watching near-term videos, we've been wrong with timing. This rally here has certainly been extended longer than we had thought. But I think there's a lot more information and a lot more clarification at this point with what we have. So let's go ahead and just jump right into it. I have this chart up here. This is the SPX on the monthly, weekly, and 65-minute. We're just going to go through this really quick, and then we're going to focus on the daily. That's where most of the new updated information I have is available to you. So right now, what we've been talking about is we're fighting with the 8 EMA. The 8 EMA is a trend indicator on all time frames. On the monthly time frame, we're in a bear market. We're heading down. So we're fighting with it right now. We have not had a close above that 8 EMA. This month is not over yet. Yes, we are above it slightly. We had a slight close back in March above it and then broke right back down. But since then, we have not had a close above that 8 EMA. We are trending to the downside. That continues to be until we see another close above it. That continues to be our thesis at this time. So everything's trending down. We have on the weekly time frame a back test. You notice how we had the series here and we had a bear market rally, broke down from that uptrend line there. Same thing. Same thing's happening right now. We're back testing it. And then we'll head lower. We bounce off that 50% retracement. I do expect that our next level of interest is going to be down below. We're going to start to break this channel as a wave 3 would do so, and I'll show you the wave count, Elliott wave count on the daily time frame, but that would be our point where we start breaking underneath this channel and breaking down from that point. Now, you say, what about the positive divergence here? That's super important, right? And I was indicating that if this plays out, if we cross this bull cross, that this is going to be a very important rally that could move on for some time. But the caveat here is that look on the RSI, the extreme readings of this move, it barely didn't even touch the actual 30 mark. We're in the 30 point something area here and started to move up from there, started to strengthen. Well, this is a bear market. That's not a very extreme indication. Look at it in a bull market where, we didn't just hit 70 and just, continue down. We were just up in the range and nosebleeds. And if I go back, I'm sure we're in the 80s. This is a weekly time frame. We're in the 70s to 80s, extreme, bullish. Well, in a bear market, we do the exact opposite. It may not last as long or we oscillate that long. It could. But, we need to hit some readings down in the 20s, okay? So right now, I think we're just moving sideways and we're getting into that topping territory for a bear market. We're still right at that 50 line. So we're considered neutral at this point for the RSI for strength. And I think that's kind of our turning point, and we can easily burn through this area and oscillate down there. You should see some green. You should see some green down in there. Look at the on the 65-minute. That you see how it turns green there? That's that's where we start getting extreme. And we need to see that on the weekly time frame before we even think about ending this bear market and continuing to the upside. So this right here, I just think this is a sideways move. You might even be able to draw some sort of triangle, and then we break down from there like a bear pennant or whatnot. Okay, so the 65-minute chart, we have a formation that's coming up. I'll come back to that. Let's go ahead and move over to the daily, spend some time there, and really focus on what's happening right now. So we'll get to these yellow arrows here in a minute. We had our large bearish falling rising wedge, broke down from that, and we just reached the 50% point just from this move. Now if this is a bear market, this is just one move that we have to retrace from. We have a massive amount of territory that we've come up for the last 15 years, and we have to retrace some of that. Okay, just looking at the daily, we have a series here, 5-wave, 1, 2, 3, 4, 5-wave series, where we had a correction, a large, massive correction, and we have, I believe, as our first wave of this next series, which should be a larger series of 5 waves down. Are we getting to the extreme point to where we're correcting? Well, let's look at the traditional technical analysis, and we have a wedge forming. We're getting up to the top of that wedge near the 200-day moving average. We have a downtrend line. We have the top of the wedge. We have a gap right here. We have so much confluence that we're right at this point. And, this says to me that within the next couple days, we should be reversing, or at least showing some signs of weakness at this point. And so, we're going to play this. We're going to play this point. We already started playing to the downside back here, and that didn't play out. We actually kept going with this 8 EMA on the daily, which is the trend indicator. So technically the trend is still to the upside, but we're getting to a point where we're extreme on all angles. And let's look at this from a RSI, or I'm sorry, MACD point of view. We're headed to the upside, but we're getting to that downtrend, that kind of extreme area. If you notice all the way up here, around that 68, we top there, we got above for a second, and we're right back in that territory. So this is where we should expect to see some sort of turn at this point. Okay, on the RSI, same thing. Since the bear market started, we had the extreme reading there, but we're in a downtrend, and we're right at just about that point when we had a top here around the 65. It just downtrended. But we did have a ending a series and correcting that and balancing out that series. We should have another extreme reading, but we're not doing that right now. We're not correcting a large series at this point. This is just the start. So this should not be another extreme reading to the upside. This should simply be correcting to, similar to this point, up to the 65 area, 60, 65. That wasn't correcting a huge series of movement. That was just a wave 2 pullback, So we have a wave 2 pullback, a minor pullback there. And so the same thing should be happening. So we should be ending that pretty soon, but we are still in an uptrend, if you notice that uptrend line there. Now, here's what the McClellan Summation Index is, what we used to use on pre-market. And with this pre-market, I used to go through individual stocks, but I don't go through the individual stocks anymore. Not so much. We do Elliott wave counts, but not so much every day, because we trade mostly indexes. Everything pretty much moves together, and so it's easier for us to just use SPY, QQQ, IWM, and trade futures on ES and MES. So so that's why I stopped using this setup. But here we go. Here is our McClellan Oscillator Index, Summation Index. Now, what we noticed here, after this, after the Corona crash, we had a big reset. Got down to this bearish territory. If you notice, we have this below this gray bull bear pivot from the 1600 to just about, I guess, 1000, right around that area. That's our pivot for a bull market and into a bear market. Okay, so we had been in a bull market for a long time. We reset and had a thrust back up into the bullish territory. Okay, and from there we continued in that bull territory. Now we started to weaken over time, and so price started. We kept going up, and we started to diverge in this channel to the downside. But it didn't really break us until we got below that pivot and stayed below that pivot. Now we're in the bear market territory. You see that back in 2021. To start there, we start breaking down. Well, that's when we retested that pivot, came below it, and now we've been in that area for quite some time. But now notice that we had that large reset, just like the reset there. We're in a bear territory, we reset, and just boom, right back down into the bearish territory. So to me, that's exact opposite of what happened in this Corona crash. Now, in this instant, we should see, just like this one, we're like, I remember back then people saying, oh, okay, this is the top, this is the top, this is the top. We had that Corona crash. All the news was bad. Everything was going, the coronavirus, this and that, and we're going to top there. And we held not only a particular support, the MAs, but we also held on this McClellan Summation Index above this pivot. And that's very important because we stayed in the bullish territory. All right, now think exact opposite. We had our reset to the upside, came back down into bear territory, and now we're testing that pivot again. So this pivot's going to be very important. Do we stay in this bear market territory, or do we get above and hold it as support? Okay, this is, I think we move to the downside. I think this is our territory where we continue to the downside. Okay, so that's super important with this. It's so accurate. This is such a wonderful indicator, and I can't believe I haven't been using it. What else do I need to show you? Okay, on an Elliott wave terms here, let's pull that up. Elliott wave, we have, since we started the bear market, we have a minor wave 1, 2, 3, 4, 5 for intermediate 1 or A. Back to 2. That's that huge reset that we were talking about for 2. And then we're back in on minor 1, 2. And then we're looking for a larger wave 3 all the way down to possibly that 2400 to 2200 area down there. So we have a lot more to go. Okay. And straighten up these lines here. I know it's a little bit longer video, but I have to be very thorough on what's happening here. We've been talking about our counts and how this works. Now, we thought that we hit this 61.8 retrace already, and I thought that's where we played it down here. But one thing that I missed was this 5-wave series down here. We have a 1, 2, 3, and then they crunch a 4 and a 5 right here. If it ends right here, then we have to bring the bottom of our retracement. The series the wave series for wave 1 ended right here. Okay, so I have to take this 1. I didn't move that yet, and we ended it right there. And that would bring our retracement to exactly 40, 42, 16, which we have not reached yet. We came short of it, and then we're coming up to that point, and we'll probably gap up into it tomorrow. The market's closed right now, and this makes perfect sense. And then we had an A, B, and a C, an expanded flat, where we have 3-wave move up for A, 3-wave move down for B, and an ending diagonal here, which counts perfectly for wave C. And that's about to end, and that's where we come up with if we have, I'll just use this chart here. I don't want to dig in that close. Let me get all this a little bit closer. Okay, now what's an ending diagonal? We have three waves to the upside. I'm sorry, we have 4 waves, 5 waves, 1, 2, 3, 4, 5 waves to the upside. Wow, struggle on that one. But with the ending diagonal, they're made up of 3 waves for every single one of those 5 waves. And that's what we were getting. It was a really confusing count this whole time. So after you have your A, B, expanded B, which made a lower low to hit that 50% retracement. Then we have an A, B, 1, 2, 3, 4, 5. That's a 3-wave series up there. We thought we ended it there, but oh, hold on. Okay, sorry about that. I got locked out. That happened as the video was going. This never happened before. Whatever. We'll just edit it out. Or maybe we won't. Okay, here we go. So we were talking about this 65-minute chart. Now, I just brought it up on a larger screen here just so you can see it a little bit better. This ABC correction that we have here. Remember, wave 1 ended up here. We had an A, 3-wave move up here. You see that 5, 3, 5. So that's a 3-wave move up, 3-wave move down. And now we have a 5-wave series to the upside, right into that 61.8 and all those other confluences that I was talking about. Sorry, it's a little choppy in here because this is the pre-market, and SPX doesn't actually it doesn't trade overnight, so it still looks the same here, but it has a little choppiness in between days. All right, now for this ending diagonal, here's what it has to be for an ending diagonal. We have an A, B, C for a wave 1. I can put that in there for you. ABC to end a wave 1. And then 3-wave move down for 2. And then a smaller, this wave 3 is smaller than 1, which means 5 is going to have to be smaller than 3. And then we have an A, B, and a 1, 2, 3, 4, 5. So that's the 3-wave series up for wave 3. And then since we're in an ending diagonal, this wave 4 has to be smaller than wave 2, which it is. 3-wave move down for 4. And voila, we have the last wave here, which we're looking for, an A, B, and then 1, 2, 3. We're in wave 4 right now. It could be complete, or it could be a flat where we have a little bit of sideways action here. And then a 5 to the upside. Okay, we're not in that wave 5. We may be still in wave 4, but a really, really small time frame here that we have left. And the 40-42 is our target. 16 would be exact for a wave 5 to complete this whole series. I am very confident in this count. Nothing is a for sure thing. The only thing that if this is an ending diagonal, this wave 5 cannot be, wave 3 cannot be the smallest. So it's already smaller than 1. So 5 has to be smaller than wave 3. Now, if we do our extension, that brings us up to about 4,200. Wave 5 cannot be past about 4,200. You can use the extension tool from the bottom of wave 3 to the top of wave 3 to get its length, and then start it at the bottom of wave 5. And then wave 5 cannot exceed about 42.34. I know that's a big range, but I'd seriously doubt we're going to get to that point. That's a long way up there. We have a lot of confluence before that point. That's just a definition of an ending diagonal, that it cannot get past that point. So for this to be an ending diagonal. All right, so that's all I have for you. All of this stuff comes together, builds a large thesis, and then where do we head from here? I guess that's the big question. Well, if this is a larger wave 1, 2, or B, then wave C, that would be your extension down to 2400. Doesn't have to get there, but usually a wedge like this, usually you retest the bottom of that large corona correction there. We had the crash and then a move up, the thrust up for a rising wedge. Usually you go to test that area. So that's around that 2200. The wave 3 is possible to 24. So I call this the 22 to 2400 range that we're looking at for this to be a 1, 2, and then 3 or C down there. Now, at that point, we have to really look to see if we're going to have a wave 4 and then a 5 down to end this, or this is all ended here. All right. It depends what kind of bear market this is, but we'll keep track of that. And our next zone down here for this wave 2 should come down and give us some trouble here in this point between a 35 and 3200 area. That 3200 is going to be pretty tough to get through. Maybe there's a wave 4 there, and then some sideways action before we move down into the next zone down here, where we would start to get that 50% retracement of since 2008. That's where our next target would be after this zone here. So 3,200 is a target, and then 2,700 below that. Very extreme. Will we get there? I think so. All right, that's about it. Thanks for joining us. A little bit long video, but super important stuff. If you have any questions, put it in the comment area. Thanks for joining us here at Options Tenor, and don't forget to like the videos.